Hey, Johan.
Hey.
Welcome to Wise Guys 5 Minutes.
Thank you.
I wanted to get your perspective a bit. It's been more or less 2 years since you left Holvi. You took a different kind of role. What has changed in the last 2 years in the fintech space?
In the fintech space, quite a lot of things have happened in the fintech space. I think we're now seeing the second wave of fintech. So I think very much Holvi and neobanking, and particularly of the payment startups. There was the first wave of enabling building real stuff on top of payments that enabled a lot of new services to be built and could make a change in people's life. What you're seeing now is more deeper change and saying, all right, so now we know the financing ecosystem and the banking ecosystem, and we're ready to take on the challenges of the next level, attacking some of the larger asset classes and problems out there, looking at how do we change pensions, real estate, capital markets, a lot of the new areas within fintech, which wasn't available before, but I think we're getting there now.
So within the trends coming up in the next 2-3 years, so you expect much more fintech or newer fintech classes being created, right?
Yep.
So not just payments, but other areas. What other 2 or 3 trends clearly are coming up right now?
Well, I think sort of like when you look at fintech, a couple of things that have matured is that the technology has become a lot better. Like technology has been an enabler in many ways that you can now pick and choose a lot of services off the shelf that wasn't available before. So if you're building a new fintech, you can concentrate on building the parts that brings value and brings distribution and brings scale to your company, rather than building the fundamental Lego blocks and say, if you needed to do a company today, there would be off-the-shelf KYC AML, there would be good middleware systems, there would be good payment systems, there would be a lot of things to choose from to make your entry point easier. And that's also one of the things that we see. The cost is coming down, the convenience is coming down, and the number of obstacles that you have to climb to enter the spaces is also coming down.
One of the key differences with SaaS business models is the regulation, right?
Yeah.
So what's your view on regulation? How is the regulation evolving? And you are in a way, you like to operate in the regulated fintech space.
I do.
So why? Why you pick that in a way?
Well, I think one of the things that you have to regulate is like there's always this: is regulation good or bad? Like the first part is that the regulatory perspective of first PSD1 and PSD2 has enabled a lot of the opportunities that we see in front of us now, and the regulatory driver in opening these markets has been a real enabler. So regulatory landscapes are good. It's also one of the things that has changed. I think a couple of years ago, looking at it, there was still a lot of risk in will these regulatory models work, and can we operate as we like, and are there risks that we haven't seen? And today, a lot of the risks are basically been mapped out. We know we can operate certain neobanking models. We know we can apply them to different areas. And we know sort of what the risks are in entering new startups on that front.
I always like to call you when there is when a journalist asks me who to watch in a way, right? So who are you watching in the fintech space in Scandinavia? Which companies are you taking a close look? 2 or 3 companies that come to your mind right now? So
a couple of the things that I've been working actively on is one part is a company like Grandhood, which is solving a pension problem. We know it's again one of those asset classes. We know there is a problem. We know costs are too high. Also a problem on the level of our society that a lot of people are not saving enough for pensions. They're underserved. So there's an underserved market that's fairly profitable, and you can make a difference both to the individual that you're serving, the society that you're operating in, and you can build a good company at the same time. So 3 very good places to get started. Another company that I quite like is a company like Brickshare. Again, looking at real estate, it's complex, it's cumbersome, it's high investment, hasn't been available to a lot of ordinary people like us who wants to invest in real estate. How do we make that asset class available? How do we build a product that people like to use? And how do we make it liquid so people can get in and out? So I think they're doing a good job on this. A company like Enkla in Sweden, at least in concept, looking at mortgages, is also one of those things. We all know mortgages, we all hate them, we all have one. We wish it could be better.
No, we talk about them. We talk about how to say, everything in payments has been invented. Of course, now there will be companies doing a bit better, but the big things in payments probably have passed. But now it's the other asset classes. You mentioned mortgage. I think also in the insurtech, in the GovTech, in the regulatory tech, there will be new things, and that's what you might find the big new unicorns because nothing is still there, right? So
yeah, but it's a lot of the same things. Like you got to figure out how do we get into a regulated industry, provide a product that people like, and take some of the existing profit out of the market, right?
One last thing, I like what you always say that you're in a way. As a startup CEO, you have a specialized to provide value when the company is in the space of 5 to 80, right? So when you're looking at this early stage fintech, the first clients, a product there, what kind of advice?
So 3 things to think of. First of all is like your team. Like, do you have the competencies that you need to start? So fintech is a little more complex. You need to have a good understanding of regulatory, product, market, technology, customers, marketing. There's a lot of things to understand. And only being able to navigate part of it really limits the prospect of the company. So pick your co-founders and your team from that perspective that you got to cover all the basics. It's not easy. It's a lot of different skills, and there's a lot of value created by bringing different skills together. And then the second part is always with a startup, you're spending more time in your startup than anywhere else in your life. It's a major decision. So choose good people, be around good people. It's a hard journey. It's got to be fun. It's got to be worthwhile. So make sure of that.
Yeah, we talked today also involve a lawyer soon enough in your team, right? If you're a fintech.
Yeah, fintechs might be like there's a lot of value to be gained from having, I think, a lawyer on board. In Holvi, we were lucky enough to work closely with one, and some of the other startups that I've been looking at have lawyers, on board. It's a huge differentiator. It's a different mindset, but it can create a lot of value quite early on.
No, and it forces the CEO to think a bit differently, right? So,
yeah,
because they will have the critical thinking and said sometimes too much. But, where do you find that balance?
A little bit of lawyer, not too much lawyer.
Yeah, a little bit of lawyer in your life. That's good. Okay, thank you very much. It's been a pleasure.
Thank you. Thanks. That was easy.
Yeah.
It's like being wise 5 minutes is a long time, dude.